and welcome everyone, wherever you are in the world. Thank you for joining us today. After a small, tiny little summer hiatus, we are back with a bang with our Syncron LinkedIn Live, and I'm wearing my Syncron orange today. Super excited. Really looking forward to this topic. Hilbrand will be sharing some details about an upcoming event at the end of the discussion, so you'll want to stick around for that. I'll put all the information in the comments section, as always. And one thing before we jump in, we love your participation. So please ask challenging questions. If you have a different perspective than the panelists, add your thoughts in the comment section. You know, make these guys sweat a little bit. We love to hear from you. We love your, engagement in this. So yeah, please don't be afraid to do that. And with that, I have no other announcements, so I will pass it on so we can get this conversation rolling. Let's do a little introduction of everybody. If you could introduce yourselves a little about what you do, that would be great. Let's start with Hilbrand.
Thank you, Justine. My name is Hilbrand Rustema. I'm the Managing Director of Noventum Service Management Consultants. Been in this business for more than 30 years, where the last almost 23 years running Noventum, and basically helping all kinds of companies, most industrial equipment companies or medical equipment companies to grow their service business.
Brilliant. And my name is Erik Kjellström. I'm a director in our solution engineering organization here at Syncron, and I've spent my career to help companies to evolve their services businesses in the topics of service supply chain, in terms of service execution, and in terms of service pricing. And I think this is the most interesting thing that you actually can work with, because there's so much potential in it.
Excellent. Thanks, Erik. And hi, everyone. My name is Sarang. I'm the Senior Director of Industry Solutions at Syncron. Now, I've spent about 16 years in the service space, started out in operations where I was mapping out reverse logistics networks, and then moved over into the software side of things, where I've worked with numerous service organizations as they've gone through their digital transformation projects. And I'm very excited for our session today, which is going to be focused on aftermarket service. And we're really going to dive deep into how different organizations are driving growth and profitability within their business. And look, just to set the stage before we get into the group discussions, I was thinking about how we can kick this event off. And look, a couple of weeks ago, I was at a service conference, and I did a presentation there similar to our subject today. We were talking about driving growth and introducing new offerings to the market. And when I did my presentation, I was thinking about different ways of kicking it off. And I usually like starting out with a stat. And so earlier this year, Syncron conducted a research study where we interviewed 500 executives, everything from service executives to CFOs, CIOs, heads of supply chain. And we asked them a number of different questions about their aftermarket business. And I'll tell you one really key finding that came out of our research study, which shocked me a little bit, was the executives believed that if they could make investments in their organization, whether that was operational changes, whether that was going through digital transformation projects, whether that was investing in different technology to support their business, they felt on average they could drive an additional 10.5% increase in profit. And yes, I mean, let's just take a second to think about that. 10.5% on average increase in profit. And it was interesting. I mean, look, I've heard things like that sometimes in sales presentations, but look, to hear it directly from service executives, to hear it directly from CFOs, CIOs, I mean, that's absolutely amazing. And it tells me that there's tons of opportunity in this space. And look, team, I'd like to bring you into discussion now, and maybe we can just start off with just a view on the current state of the market. And I mean, we're 3/4 of the way through 2023. What have you learned so far in 2023? And even if both of you were sitting in the seat of a CFO for an industrial equipment manufacturer, what's your view? How are you tackling this market? What have you seen so far as we look at 2023?
Would you like me to start?
Sure.
Yeah. So what I think we see worldwide, because most of our clients are multinational companies, I think we see due to the rising interest rates in the capital markets, we see that capital equipment financing is more difficult, and it's starting to hurt equipment sales. So therefore, you do see as a natural effect of that, that service revenue and profit is contribution is increasing, and it's expecting to have a very significant impact in 23, but also, who knows, 24. So having said that, I think industrial equipment companies are not only experiencing a growth in their traditional, more product-related services, but also they are trying to beef up their what we call predictive and proactive services. That's services that are not only technical to support the product, but also more related to the, let's say, the end customers' business challenges to help them improve. Now, a second very important element, and I think every service manager will recognize that, is obviously the skill shortage, particularly in high-income countries. That could hurt some of the businesses because it puts a cap on growth. And what we see there is that companies are trying to develop new approaches to service delivery. Think about completely redesigned service delivery models with more remote, more AI, more digital forms of delivery, leveraging the knowledge that exists in an organization. And then maybe the third one, it's a bit of a consequence also, is we see an increase in the investment in digitalization of service operations. And obviously there we see the big topic now is AI that holds a very big promise for quite a radical productivity improvement in the service business. These are my three major observations.
Hilbrand, Erik, I want to get your thoughts on this too, but it's always interesting to see the different transitions that service organizations go through, right? We've gone through it. Every organization is maybe at a different phase of their reactive to proactive to predictive transition, right? Then, we have the cost center to a profit center transition. On the service delivery side, we've seen the transition from product to a solution offering, and now maybe we're making the third phase of that transition into an outcome-based offering. So very interesting to see all the different phases and transitions that organizations are going through. And Erik, before I want to get your thoughts. Hilbrand, just one thing that you had said, you said that a lot of organizations maybe are starting to delay their capital equipment investments, or maybe it's more difficult for them to get financing. Why do you think that's the case? Is that just because of the market that we're in right now? And obviously a lot of organizations are dealing with a volatile market. They're dealing with inflation, and maybe that's driving why it's more difficult to get the financing, or maybe they're hesitant to make the investments.
Yeah, it's very simple. It's the cost of capital is increasing. Yeah, like we come out of a period of basically money was free. Yeah. Now you see central banks increasing their interest rates, commercial banks increasing their financing rates, which makes it more difficult to sell big capital equipment projects. Yeah? That's the main reason. And then as there is, more uncertainty in the financial world, many senior executives, they're more hesitant to invest at the moment, as they don't know exactly what is going to happen. Yeah? And that is particularly the long-term investment cycles that you see in capital equipment, which typically has sort of this waves of, let's say, 7-8 years. We are now going into sort of a downfall of that investment, but that means that customers that have existing equipment, they have to spend more time with their existing equipment, or they want to upgrade it, or they want also different formats on how to use the technology. And so new business models like using the equipment or any type of technology as a service, rather than having to purchase it, and getting more and more specialized advice from the equipment provider itself. That is definitely a trend that is continuing.
Yep.
And it's just accelerating. I have the feeling.
No, that's a good point. Erik, want to get your thoughts, and Hilbrand, very important point. I mean, look, the 7-8 year life cycle, maybe now that's getting extended to 15 years or 20 years. And Erik, I know you're right in the middle of it, working with Syncron's customers every day.
Yeah, for sure. And I cannot do anything but agree that we've had a lot of impact this year from new increased focus on working capital and cost management, right? It's been on the minds of lots of leaders in companies that we work with. Also, of course, when it comes to the customers of those companies as well. So while the focus now for the last couple of years has been, almost like unconditional growth, and we've been used to seeing record earnings coming out of a lot of the equipment providers. We now see kind of a little bit of getting back to basics in terms of making sure that capital invested are giving the right yield, and that we really also manage cost changes, which is so incredibly important for one of our main topics that we're going to discuss today, which is profitability in the aftermarket, right? Another point which is quite interesting is that there's this one topic that really doesn't follow this trend, and that's the desire to invest in anything that has to do with AI. I think that's the biggest hype we're already past, and now we're getting to start seeing a little bit more of a sober view onto what are the use cases where this really helps me, instead of just being very, very happy about anything that has AI in its name or a .ai web address. But so my themes for the year is primarily back to basics, back to profitability.
Yeah, no, it's an important point. I mean, even the whole AI piece of this, Erik, is interesting as well. Hilbrand, I don't know if you remember this when we were doing one of your previous events, the one focused on AI. I remember there was someone, one of the operators mentioned something around, when they look at making investments in AI, their biggest concern is not necessarily the security or the data. It's more are they moving fast enough? We're in a time right now where technology is developing so quickly, and their organization was more worried about, are we keeping up? Are we moving fast enough? Can we take out all of the red tape so that we can test out some of these solutions?
I do remember these comments, and actually there were quite a few companies there that are testing the waters with AI. that research, which will come out one of the next week somewhere, we will publish that. But one of the interesting things that we found in our research, looking into the potential impact of AI for companies, is that the productivity potential, particularly in service, is huge. We, a couple of use cases, what we looked at, we were looking at numbers like 30% productivity improvement, which is spectacular. We haven't seen such productivity improvements not in my career. So that is promising spectacular numbers. However, AI also has the side of, there's some fear, particularly for employees, customers. So it's not an easy topic. And I think, next year we will publish that research paper, so everybody can read it. But it's very, very promising. And as service organizations are really knowledge organizations, obviously AI has a huge potential. We found more than 100 use cases for AI in service. I think many of the solution providers are working on them. We see lots and lots of experiments left and right. So yeah, I'm very excited by this new productivity boost.
I'll tell you, it's got to be challenging though if you're an executive, because to Erik's point, it's really trying to figure out what's real and what can actually have an impact on my business. But look, as you even look at 2023, or even look at the customers that you're working with, I mean, help the audience understand, where are they making investments? And I'll give you just my perspective on things, even coming out of the research study that Syncron did earlier this year. There were two big things that bubbled up to the top when it comes to driving growth and profitability in the organization. And it even goes back to some of the things, Hilbrand, that you were talking about with, the current situation of the market and the cost of working capital. But, our research showed that a lot of organizations were very focused on service parts components and pricing service parts components. And then probably an even bigger area to focus on is how they're dealing with their service contracts and looking at pricing their service contracts and looking at cost estimations and restructuring some of the contracts. So want to get both of your thoughts on that as well.
You want to start, Erik?
Yeah, you go ahead.
Okay. Yeah, so what we see, so I would confirm that, let's say, pricing, particularly in services, is a bigger challenge than in parts. So value-based spare parts pricing is obviously, I would say it's a known topic, and many companies know how to do this very well, including Syncron. Of course, you offer a fantastic tool for it. What is more difficult is the more complex services, such as with the predictive and proactive capabilities in it, where the challenge, especially for the product-oriented companies, is very often to stop thinking about the product and to do a serious effort or more effort into finding out what the customer really needs in terms of services and what is valuable for the customer. I always say that as a service organization, as you progress in your value propositions, you are moving from this effort-oriented services that provide hourly based field engineering and spare parts towards full service contracts. And eventually you end up in the more what we call customer business related services. And there are lots of different business models. But how do you find out what is valuable for a customer? And think of yourself more as an insurance company that provides a lot of intangible benefits, and try to figure out what for the different types of customers what is value to them. Yeah, so you could sell the same product and the same spare parts to customers, but there's no such thing as a standard customer. So that understanding with figuring out what are the different types or segments of customers, what is it that they value, how would they like to interact with you, what is the customer experience that they're looking for. There's a ton of details there that you would have to understand, appreciate, and then design your services and design your customer experience along with it, so that the expectations that they have, particularly the intangibles that they have from the brand, from your company, that it doesn't happen by coincidence, but it happens by design. And I think that's one of the big challenges now, particularly for these industrial equipment companies and also medical equipment companies, I would say, that are traditionally a little bit more focused on the products. Having said that, every service organization that I work with is always continuously trying to improve productivity. And as I said before, the challenge now of the skill shortages, where you have lots and lots of field engineers that are retiring and a very limited supply of new talent, that poses a whole new challenge to many service organizations. So having service delivery models that are relying on field engineers and field engineers only, that's a thing of the past. Yeah, so you'll have to understand the value and then design and configure and deliver a service delivery model that would produce that value that the customer is looking for. And think not only about measurable value, like as in savings that you realize or any financial benefit for your customer, but also think about those intangible values. And I think that's where a lot of investments are made. Actually, that's a big part of our work, where you'd have to do typically some customer research. You have to design new services. You have to try all these new services and pilots until your customers tell you that you got it right, and then you have to scale it.
Yep, and I'll tell you this, Hilbrand. I guess it's a balancing act, right? Because I go back to what Erik said earlier. You know, some of it is looking at the future and looking at what you can introduce to the market, and then some of it is also, Erik, like you said, going back to basics. And I want to get your thoughts. I'll tell both of you just a quick story before we jump in with Erik's thoughts. A couple of weeks ago, I was working with one of Syncron's prospects, and we were talking about this company's service contracts. And I was trying to understand, like, the way this company structured their service contracts. They had 3 levels of a contract, right? A silver level or gold level, and then a platinum level contract. And they were telling me, you know, when they sell a gold level contract, they could sell it to 2 different customers, and the profitability of those contracts will be very different. And I was sort of scratching my head trying to figure out, why would you sell 2 different customers a gold level contract, and why would the profitability be so different? And the person I was talking to chuckled a little bit and said, you know, Sarang, while we sell them the gold level contract, that's not what the customer actually buys. What they end up buying is the gold level contract with 5 customizations added onto it. And so he said, at the end of the day, our organization has 200 variations of a service contract. And it can be very difficult to be able to estimate costs and really measure, you know, what our profitability is going to be. And so they're focused on that. They're focused on restructuring their contracts so that, you know, they have some uniformity across their organization. But Erik, wanted to get your thoughts, because I know you're in the middle of working through some of these projects with customers. Are you hearing something similar?
Yeah, for sure. Right. So first of all, there is different progression, and there's different level of maturity with the different customers we speak to. And some of our customers will be very, very far along on the the kind of development curve of services, because they've been doing it for a long time. And to Hilbrand, to your point earlier, they have already started to think about what is it actually that my customer needs from me in terms of how we can increase the value creation using our services. For example, it might not only be a maintenance contract, it might be also energy optimization services around how to use the products. It might be also about, output optimization and so on, right? And the advanced data analysis when it comes to their effectiveness of the usage of the products. But double clicking on something that I think is very, very interesting, and something that we're seeing a lot of interest about, because it's something that we've recently started to get really, really in depth with in our work, is how to actually build and estimate contract cost and contract risk and contract profitability for different offerings like this. Because oftentimes you'll see that a company has fairly standardized way in which they can offer, as you're saying, Sarang, a standard service contract. But what we often see is that it's not really enough to think standard when it comes to what is the intended use of the equipment, what is the intended value creation for that customer, right? So something that has been very interesting to look at when it comes to really understanding what drives the contract is that we will need to look in many more dimensions of how we normally thought it was, or how we originally thought it was figured out. Because it's not only based on, let's take a simple example of a car, how much you're going to drive each year and where you're going to be in what type of climate with that car. It's also going to be about which configuration do you actually use on your car, etc. This is going to be probably even more important than just the configuration or just the allowance of the actual miles that you drive, to make sure that we first understand which services should be recommended to go into contract, but also to understand what is it going to cost to deliver this insurance towards the customer. And also from a value driving perspective for the customer, what is it actually that we should be pricing for, right? What is the actual value drivers for the customers? This is something that I have been really excited about talking to customers about quite recently.
Erik, I'll paint a scenario for both of you. Let's say you're an organization today, and a lot of your competitors are starting to develop new service offerings, and we'll go a little bit deeper into this. Maybe they're starting to develop outcome-based service models, or just different types of service models. But let's say your organization today is still having difficulties figuring out how to structure the service contracts that you have in place, and how to understand what's actually driving profitability up or pulling profitability down, for each service contract. What do you do in that scenario? Do you say, hey, new service offerings are something of the future. We need to focus on restructuring our contracts today so we understand profitability? Or do you try to do this in parallel paths where you restructure contracts and you also focus on developing new service offerings? And before we hear from both of you, one thing I'll throw out there is I've talked to a lot of service leaders even recently that have said things like, introducing to new service offerings to the market is great and something that we should be doing. But in many cases, this is not just the next step of service. It is fundamentally a different way of doing business, and that can add a lot of risk into your organization. So Want to get both of your thoughts on that.
It's a very big question, Sarang, you're asking here, but it is also a very typical situation that at least I find in my daily work. I'd say most of our clients, when we start working with them, they may not have a very structured portfolio of services. It is typically the result of more of an organic development of the service business, whereby not necessarily the difficult strategic choices have been made. So that means that you find a lot of service organizations, large multinationals, for example, where they have a decentralized organization, meaning every country is basically given a lot of freedom to act and to design what they feel is best for their country or their region. And what you end up doing is you create those, a zillion different service contracts. And then when you try to improve the productivity in an organization, you obviously, or typically, you buy one IT platform, and then suddenly you are faced with the question, okay, now we have these thousands of different variations of service contracts. How can we create a globally scalable, very efficient service organization? Yeah? So the typical approach here, and I say typical because there's never a silver bullet, but is to start from the outside in, and to have that customer view, and to say, hey, what are my 3 to 5 major type of customers, and how can I describe them and qualify in such a way that my sales organization can easily recognize them. And then do I understand the typical challenges of each type of customer? And then how do I create one portfolio of services where you have a couple of sort of core value propositions, which are your, let's say, ABCs of your portfolio. And then on top of those core propositions, you have a couple of options that are in itself standardized, but that allow you to personalize to the particular needs of customers. But they're the most difficult decisions that always need to be made. What are you not going to offer? And what are you not going to do? Try to explain to a salesperson that is, about to close this major deal, that exactly that variation of service that he wants to offer, you can impossibly offer. Not too long ago, we've done a study, and we found that only a 5% deviation from a standard offering resulted in 80% of all the cost overruns in a service organization. Yep. So I always use the word standardized personalization, meaning in the perception of the end customer, you offer a personalized service because you have this ability to personalize with some standard options in your service contract. But if you create this monster with the thousands of different variations of a service, there is no control anymore. And certainly the scalability is gone, and then your productivity is gone, and you will see that the profitability going down.
Yeah. Let's do this. Why don't we take a question from the audience? If somebody's asked a question around structuring service contracts and what actually has to be structured, is it, when we even look at the entitlements, is it, when, what's going to be delivered? Erik, I know you've worked with a lot of organizations as they've gone through this. How do you look at, how does a contract need to be structured, and what are our typical offerings?
Yeah. Well, first of all, it's the difference between standardization and structuring, right? Sure. But the key thing about when we're talking about a service contract, especially when there's going to be variations of service contracts, to make sure that it's very, very clear what is actually included in the service contracts under under what conditions, and make it very, very easy to manage customer expectations when it comes to what's actually on the contract. Because something that, it's the most typical, field service type of scenario or warranty scenario that will ever exist. It's going to be that, the customer is always going to say, I have a problem with this thing. And, the person answering the phone doesn't know if this is a service that we provide or not, as the manufacturer of, or to say, is the customer entitled or not to this service, right? So for me, the most important thing when we talk about structuring a contract is to make it very, very easy to do fast and easy entitlement checks, making sure that the customer always gets what they pay for. And if we do something that is outside of the contract, we should make it easy to know that it is outside of the contract, so that it doesn't leave too much of room for interpretation for the end executors in the service chain, meaning the technicians or the customer care representatives, who will have this maybe difficult discussion with the customer who really wants help and wants to argue that he should get help urgently, and that it always should be free of charge regardless of what it is. So from my perspective, the inclusion aspect is the most important thing to structure. Make sure it's systemized, make sure it's something that from any aspect of your service execution becomes very, very clear. So that each customer is getting what they paid for. And if you're doing services outside of what they paid for, you should at least know about it, right? Because many times this is actually a guess from service companies.
Yeah, so important, Erik. I'll tell you a quick story. Years ago, I was working with a customer, and I was on site and shadowing somebody in their contracts organization. And I asked them the same question. I said, look, when a request comes in, how can you determine within seconds, is this covered under a service contract? Or, if you're going to approve this work, how do you track that you're going to do this, but it's outside the coverage of the contract? And the person that I was working with said, come follow me. And I said, okay. So we got up out of their office. We walked over into another office. We opened up a filing cabinet, and they pulled out the actual paper-based service contract. And they said, for us to figure out what's covered or not covered, we need to go ahead and just take a look at this contract. We'll get some of the details, and then, maybe 20, 30 minutes later, we can determine if we're going to approve this job. Obviously, I think a lot of service organizations have come a long way since then, but, I think it's good to appreciate where we started from and sort of the technology that we have in place today to be able to automate some of these processes. But Erik, just even continuing on your path there. Okay, so it's one thing to be able to figure out, what's covered, what's not covered. But as you're working with different customers and they're seeing what the competition is doing, and they're starting to introduce new offerings to the market, I want to understand, what are those types of offerings? And maybe, we can even start out with defining them. We hear all sorts of terms today: outcome-based service, servitization, equipment as a service. When I did a presentation a couple of weeks ago, somebody raised their hand early and said, can you define these for me? How would you define those different offerings? What do they mean? What are the differences?
Yeah. Okay. So, starting from the beginning, when looking at primarily an equipment business that sells at least some type of an asset to a customer, this is typically always sold with a manufacturer's warranty. A warranty will typically, for a period of time, cover the customer for parts and labor related to manufacturing defects around or during this warranty period. So even mandated by law in most parts of the world, that this should always go with an equipment that's being sold. So typically, when we talk about the warranty is always the base. Then there is things that we can talk about to extend what the warranty is. So for example, you probably typically have heard about extended warranties. So basically taking the warranty terms, prolonging them, or adding some additional inclusions to them, right? So that's a typical program that's offered by a manufacturer, right? So, but again, this is a fairly simple offering, right? It primarily covers, parts and labor for manufacturing defects or to remedy manufacturing defects.
Sure.
Now, something that's typically added on top of this is something that we normally talk about as service level agreements, right? Service level agreements typically stipulates what a response time is, right? This is something that could be added on top of a warranty offering, or it could be added to a service contract that might follow an expired warranty. And when we talk about the aspect of a service contract, normally a service contract will contain then a set of services. It might contain a set of parts. This might be of various natures. So it could be, for example, it could be more of the insurance type, to say that, all parts that potentially might break will be covered, or all labor for repairs or for inspections might be covered, or a portion of them, right?
Yeah.
Additionally, you could think about having, planned maintenance as an inclusion into a contract, and there's even there's also more advanced versions of contracts, and the more advanced versions of contracts. That's typically when we talk about something that is, output or outcome or uptime based. So it doesn't really, again, specify the services, but instead it specifies what the customer should be able to achieve with the equipment. So in very, very simple terms, these are typically the inclusions. Now, there is, this is something we could probably talk about for the rest of the day, but, on a very basic level, that's it.
Makes it. And Hilbrand, I know your organization has done a lot of research on even what that journey, what that transformation looks like. And so then as you start going towards something that's a little bit more outcome based, or you're focusing on the actual offering, I mean, what are your thoughts on that? What are you seeing organizations introducing to the market, and how are they trying to do that?
Well, I think we shouldn't only be talking about the value proposition and the service contracts, which I think for product-centric organizations, most of the time they try to capture that in a service level agreement. They do attempts to make the service more tangible. But what you see is, as these value propositions become more sophisticated, and the intangible value of it becomes more important, it is also how you deal with that customer, through which channels, how does the customer experience look like? I was recently working with a client, and they came to me and said, we don't know what to do anymore. All our internal KPIs are improving every day. We are performing better and better. We're more productive. We do everything according to the service level agreements, but our customer experience scores like NPS, customer sat, you name it, were going down. Why was that? Well, they were dealing with every customer as a standard customer. And that was as simple because the solution was, too simple for words almost, but they were not distinguishing what type of person they were getting on the phone. So this was an IT services organization. And sometimes they would get, a senior executive on the line with a problem with his PC, and had also a lot of knowledge about the PC and how it should work. So he would almost tell the support person what to do. And on the other hand, the other extreme, they would have somebody on the line that is not very empowered in the organization, and you can even qualify them as almost clueless on what to do with that PC. Yeah. So there are two extremes, and they were dealing with the two persons in more or less the same way.
Yeah.
So in your customer experience design, you have to be able to distinguish different types of persons, even though they are using the same service contract. Yeah? And as you move along, your whole service delivery and sales organization will change. You're going from an organization where maybe the product salespeople always sell service contracts along with it, to an organization where they may have a dedicated service sales organization, and that's I would say the more sophisticated organization, they set up a customer success organization where you have a multifunctional team that regularly discusses with the end customer, what does good look like? What are the objectives of the customer, and how do we align to those objectives? Yeah? So these are also very different organizational formats. So as you are changing your value propositions, you have to not only adjust your service delivery organization, but your sales and service, your whole customer experience design has to evolve along that as well. Yeah? So two customers that are getting the same high quality service, they may have a totally different appreciation and see different value in your service. And you see that disconnect more and more between your delivery effort and cost and the appreciation, the value of it as perceived by the customer. So there we go into the area of customer experience management and customer success management. And that's very exciting to be in.
And Hilbrand, something that I'm, this gets me thinking about, right, is that we at Syncron, we work a lot with customers of ours that doesn't have always have a direct go to market, meaning that they might have a distributor or a dealer in between them and the actual end customer, which makes it a little bit interesting for who actually owns the contract and the outcome with the customer. And something that we see sometimes is that as the OEMs try to transition more into this customer specific way of offering their services, and also offering these more advanced services that are more predictive and more outcome based, they struggle sometimes to get their whole chain or their whole delivery chain with them on this, right? Because there might be a big question of misaligned incentives. It would be really, really interesting to hear your thoughts on that, and if that's something that you also work with.
Yeah, so if you design a new value proposition that has to be delivered through partners, so you actually have two types of customers, if you may want to look at it that way. So obviously that value proposition has to be good for, well, first of all, maybe the company, obviously for the end customer, he's eventually buying the whole thing, but then that partner that you work with has to see their benefit from it as well. And you do see a lot of OEMs nowadays that try to go more direct, and obviously that makes their partners or the distributors that sit in the middle a bit fearful. But there are many things that you can do with your dealer organization, your partner organization, first of all, you always have to understand as the OEM is that you are providing a brand experience. And you will have to motivate your dealers and your partners to be a good ambassador for your brand. And the more they can do, in terms of marketing and sales, but also in terms of delivery, to confirm the desired brand experience towards the end of the customer, the more they're willing to do, you should be rewarding them for that. Yeah? So you would be running partner programs that will distinguish different types of partners. The more exclusive partners will probably be most loyal and best rewarded for their efforts, and whatever multi-brand partners are the most complex in this game. Yeah? So you would have to understand the value proposition, the branding, how does the end customer perceive that. Obviously, not one of these individual dealers would have the resources to create these new digital services, which require huge investments. Yeah? So you'd have to find new business models for that as well. I think it's a new challenge where you are moving away from just selling spare parts. That was relatively easy for the distributor. Now to sell spare plus advanced, often very digital services. Look at I don't know, John Deere or something like that. That these tractors that they sell, they're digital platforms, and they sell on these platforms. They sell many different levels of services, and they plug in lots of other partners as well. So you create digital ecosystems, and that fantastic new business models, which obviously, if you want to go there, you have to make sure that the other service business models are, first of all, functioning well. And you can't go there if you can't create a fully digitalized ecosystem with partners if you don't have the basics in order. And I think a lot of OEMs, they're forgetting that.
Yeah,
it's really, really interesting. I think about, when you're talking about this, I think about an example that is that I heard a couple of months ago. And it's a customer of ours that is very, very advanced in how they actually collect equipment data, and they analyze that, and they basically create failure predictions, who they actually share with their partners. Their partners being their dealers and distributors, so that the dealers and distributors then could proactively offer services to remedy these potential concerns with equipment for the end customer. But something that was very, very interesting that we talked about is, for example, what happens if let's say an axle for a piece of capital equipment has a lubrication failure, and the dealer knows that if the axle actually breaks, they're going to make a lot more money from that intervention than if they go ahead and solve it proactively. There's a short-term incentive than to say, let the customer fail. While there's a long-term incentive to say then, make the customer happy, do the right thing, act on the intelligence that you have. But this is a real dilemma right now. That's sometimes.
Well, I don't think it's that difficult, but you need to have the right sort of incentive systems for your partners and your dealers. Like if it is too short term, and you're not necessarily also educating them, if I may use that word, in what happens if you only go for the short term. There is no long term if you only take those short term considerations. But it's a fantastic example. Look, the variations in the different service business models, the possibilities are endless. I always say there is no limit to the service business. The only limit is your own imagination. But it is helpful to create or to work with a couple of standard business models, understand what works best, and this may, if I may, Sarang, make a little bit of propaganda for the next Service Business Forum that we're going to have in Vienna. That's on the 28th and the 29th of this month of September, where we are actually with a group of senior service executives. We're going to discuss this. What are those different types of service business models? What works? What doesn't work? What is the financial impact of these different work? We have a huge body of, let's say, benchmark data that we're going to share there. And what are the possible strategies that the different types of companies could follow? So that's, it's only one day, or we could easily fill a week with
you absolutely could. And both of the points, all the points that both of you are making are extremely important. Like the digital platform side of things, it's almost like, some of these big OEMs are transitioning from, a hardware company to a technology, a digital platform company. So it's interesting to see that change. And I think, I go back to what I said earlier, especially as you're looking at these more advanced service offerings and something that's a little bit more outcome based. There's obviously tons of reward. You can drive more profitability, you can drive a better quality revenue in your organization, but there's absolutely tons of risks as well. If we go back and we look at the Rolls-Royce powered by the hour model, that's great for your business, right? You can drive a lot of profitability, but what happens when you have, something like COVID and you've got to ground all of your airplanes and, you're not charging by the hour anymore. You're not charging by the flight hour or flight time. So it's things that you have to consider in an organization. And Hilbrand, I think your point is extremely important. Partnerships are key. Like if you're looking at your dealer network, how do you make this a win-win? What does that mean for the OEM? What does that mean for the dealer network? And how do we make sure that all organizations are happy with these types of offerings? I know we've got to close out here. We only got a few minutes left. And what I'd like to do is, as both of you think about the different organizations that you're working with now, as we go and we close out the year and we start to plan for 2024, what's one piece of advice that you would give to a service executive as they're planning for next year and going into next year, as it relates to driving growth and profitability in their organization? Erik, what's your top one piece of advice?
Don't underestimate the power of pricing. Pricing for services is key. Also pricing for services parts. This is a massive business value driver, especially now that cost has been changing rapidly across organizations. And to be honest, we have customers that are using services and spare parts pricing to basically finance billion-dollar investments in how to evolve their company. It's, for manufacturers, this is a great source of business improvement.
And Hilbrand, one from your end, and then we've got to close out today.
Okay, well, one I would say particularly aimed at service executives that are probably understanding all of these things that we're saying here. The coming year and perhaps years is again a very big opportunity to raise the awareness of your senior management teams that it's probably time to change the service business model and go to the next level. And that provides, I would say, great benefits both for the company, for their customers, and for their employees. So go for it, I would say.
Absolutely. Well, guys, thank you so much for joining our session today. Really interesting discussion. We could talk about this for hours. Hilbrand, I know you've got the event coming up, and even one day is probably not enough to go into all the detail. But I want to thank everyone for their time. And I think Justine posted the event link in the comments section as well. And so, Hilbrand, thank you so much for mentioning that. And we're looking forward to the event coming up in Vienna later this month. But thanks again, guys, and have a great day.
Thank you.
Thank you. Bye.